there's still $300-ish billion left in the coffers from the handouts from a couple of years ago. And credit card debt. I mean, credit card debt has gone absolutely, I think it hit $1 trillion for the first time. I think I have that stat right. So I just totally missed the fiscal part, that the government was going to spend their way into oblivion and not worry about the devaluation of the currency, which is why Larry Fink went on TV and said, maybe you should own some Bitcoin. You should buy it from me, but you should own some Bitcoin to protect yourself against currency devaluation. Come on. He said that on television.
The possibility of any adjustments to the long-standing 2% inflation target set by the U.S. Federal Reserve and the European Central Bank was definitively ruled out during a gathering in Jackson Hole, Wyoming, for the annual Federal Reserve Bank of Kansas City Economics Symposium. Both Fed Chair Jerome Powell and ECB President Christine Lagarde made it clear that there would be no changes to their shared objective of reducing inflation back to 2%. Global inflation had surged as economies emerged from pandemic-induced lockdowns, facing supply chain disruptions and labor market constraints. Despite the central bank's aggressive interest rate hikes, including the Fed and the ECB, inflation had not yet reached the coveted 2% goal in either Europe or the United States. During a lunch discussion, Lagarde firmly rejected the idea of revising the inflation target to adapt to the new economic reality. She stressed the importance of adhering to established rules, emphasizing that in games, the rules don't change midway. Lagarde argued that altering the target could undermine efforts to maintain stable inflation expectations, which are vital for keeping inflation under control. Mark Yusko also shared his perspective on the speech, expressing concerns about the ongoing rate hikes, increasing credit card and government debt, and what he referred to as the financial system's roller coaster-like trajectory.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I think we're back to normal, but because we were in abnormal for so long, meaning ZERP, that people don't know how to listen to the chairman anymore. They don't know what normal interest rates are. We're supposed to have positive interest rates, right? That's how capitalism actually works, right? There's the promise of earning when you put your capital to work. And so the difference between 5.25, 5.5, 5.75, it's irrelevant. What had to happen and what did happen was we had to get out of ZERP, which was designed to save the bank's balance sheets. And we have to go back to a world where they can actually earn some money. And remember, the Fed only exists for the banks. It is a private corporation, not federal, no reserves. It is a private corporation owned by the banks and the families that own the banks. And its job is to maximize bank profits. So that's what they're doing. And the fact that everybody thinks that they control everything else is why people are missing this fiscal mess. And so the thing I was totally, I won't say I was wrong. I didn't see it, because it's not like I said the opposite. It's just I didn't say this, which was, if you looked at all the data coming into last year, and we did, right? PMIs were collapsing, services and manufacturing, yield curve was inverted. All these things were saying serious recession. And I said a couple weeks ago, I said, look, I was wrong. I mean, everywhere I go, restaurants are full, airports are full. I mean, O'Hare was a nightmare yesterday. I mean, it was crazy. People are spending. Well, how the hell are they still spending? Well, it's because the government handouts in the form of disability payments, unemployment payments, all these direct government stimulus programs. And turns out there's still $300-ish billion left in the coffers from the handouts from a couple of years ago. And credit card debt. I mean, credit card debt has gone absolutely, I think it hit $1 trillion for the first time. I think I have that stat right. So I just totally missed the fiscal part, that the government was going to spend their way into oblivion and not worry about the devaluation of the currency, which is why Larry Fink went on TV and said, maybe you should own some Bitcoin. You should buy it from me, but you should own some Bitcoin to protect yourself against currency devaluation. Come on. He said that on television. when you see people reach similar conclusions using different disciplines and tactics and processes, that's when you should pay attention, right? And that doesn't happen very often, right? Because people are going their different ways. But when cross-disciplinary things happen, and this is true of innovation, right? Great innovation happens at the confluence of multiple disciplines coming together. Think about bioinformatics and things like that, and gene discovery. Drug discovery, big data and science and healthcare. Same thing here is when a sociologist can reach the same conclusion as an economist, can reach the same conclusion as an investment person, as an entrepreneur, all kind of saying, something just doesn't feel right here. That's when you should really, really pay attention.
Analysts generally believe that the recently concluded quarter should be considered the low point of the earnings cycle for the broader market. However, the economic outlook remains uncertain at best. Recent data revealed soft orders for durable goods from U.S. factories in July, and several retailers reported disappointing earnings. Despite these challenges, some investors find solace in the fact that the labor market continues to show resilience. For instance, American Airlines pilots agreed to a significant 21% pay increase, and new weekly unemployment claims decreased, signaling ongoing labor market strength. Mark Yusko also provides his insights on the stock market and the state of cryptocurrencies. Let's now dive back into the video for more details.
A couple weeks ago, I wore my roller coaster socks.
Yeah.
That I break out every summer because summer is time for roller coasters. And the thing about roller coasters is there's a lot of ups and downs, but you end up in the exact same spot. We're doing that, right? We have an up,
I agree.
and then we have a down, and then we have an up, and then we have a down. But we end up in the same spot over, and summer doldrums are that. Now, what's interesting about this chart, and I love your point about leading. Someone asked me, why are stocks going down? Right? Stocks are down 5% over the last month. It's a big move. And it seems like they go down most days. Well, it's because there aren't any humans involved. The humans are on vacation, right? We joke at the Europeans, they take August off. Haha, we work so hard. Try to get a meeting with somebody this month.
Yeah.
Forget it. I was in Chicago yesterday. I tried to get meetings. 4 people. I'm gone. I'm out. And I don't begrudge them being out. Go on vacation. It's great. But it is fine. So the machines take over, and the machines are pushing everything down. They're pushing everything down. Now, I will agree with you that there was this exacerbation on the SpaceX, news, and there was a sharp drop in BTC. But that's the nature of the beast. The thing that people forget about Bitcoin is it's not really liquid. It's not really deep, because so much of the market cap is hodlers or hodlers, however you want to pronounce it. And they're just not selling at any price. But the same coins churn over and over and over. And that's true of most things, right? Microsoft, there's a whole bunch of people that never sell their Microsoft, and there's stuff that churns. The index funds don't sell their Microsoft. And so when the free float is very small, you can get this is a chart. This orange and light blue lines, those are machines. Okay. The dark blue line is humans. That's a human reaction. That's fear. That's a human reaction to a new piece of information. The orange and the blue, like I said, the institutional demand, that had nothing to do with institutional demand. It has to do with machines, with Ken Griffin saying, everyone's on vacation. It's not Ken, it's Ken's massive team. And it's not even really a team, it's robots. So it's the robots saying, okay, we pushed stocks up the first half of the year when no one thought they were going to go up, and we made a ton of money because people were chasing. Now we're going to push down, and we're going to seed the clouds, and they're going to go down for a while. Except for NVIDIA, in theory, right? Which, said, well, we're going to have all this revenue this quarter. And stock popped after hours. But then where did it end up at the end of the day yesterday? It's interesting. Flat. was up 8% at one point, ended up flat. Stock market crashed yesterday. If you would have said NVIDIA, actually people did say this 2 days ago, if NVIDIA beats, already raised expectations, the market's going to go crazy. Well, it did, but not up crazy. It went down crazy. And we'll see how it levels out today. But that's the machines. The machines, again. And if you look at volumes in the summer, they're really low. So none of this is really that much information. Ultimately, Bitcoin, when the ETF's approved, that's when the bull gets his cape back.
When Michael O'Rourke coined the term the Magnificent Seven to describe the largest technology stocks in April, he couldn't have anticipated its widespread adoption in market discussions. However, recent developments, including the underwhelming response to chipmaker NVIDIA's stellar earnings this week, suggest it might be time for a less grandiose label. Initially, the Magnificent Seven aptly described these tech giants, responsible for a substantial share of market gains, accounting for 88% of them. However, in recent weeks, they collectively shed over $600 billion in market capitalization, although this represented only a 6% decrease in total. While still collectively valued at an impressive $10.8 trillion, it marked the first time this year that they experienced multi-week declines, despite their earnings consistently exceeding expectations. Despite their continued dominance, this temporary pause in their ascent may not be detrimental to the broader market, which saw a 4% decline over the same period. The concern arises from the fact that much of the market's gains in 2023 have come from inflated multiples, with share prices outpacing earnings. This leaves these stocks in a precarious position, priced for perfection. For instance, Tesla's share price relative to its estimated earnings tripled this year to a lofty multiple of 60, while Apple's multiple increased from 19 to 27. The recent performance of NVIDIA exemplifies this trend, as even impressive earnings failed to sustain early record highs, closing the day flat. What are your thoughts on the market's macro outlook? Please share your perspectives in the comments section. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.